Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into Northrop Grumman's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Northrop Grumman, a leader in aerospace and defense technology, has just released their Q1 2025 financial results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Northrop Grumman reported sales of $9.5 billion for the first quarter, a 7% decrease from last year. John, what are the key factors behind this decline?
The decrease in sales is primarily due to the wind down of certain space systems programs and fewer working days compared to the previous year. Despite this, Northrop Grumman has a record backlog of $92.8 billion, indicating strong demand for their products.
And how about profitability?
Net earnings for the quarter were $481 million, with a diluted EPS of $3.32. This includes a significant impact from a $477 million loss provision related to the B-21 program, which affected their profitability.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 6.21 cents, but the actual EPS came in at 3.32 cents. Can you explain the discrepancy, John?
The main reason for the lower EPS is the $2.74 per share impact from the B-21 LRIP loss provision. This unexpected cost was due to higher manufacturing expenses and changes in production processes, which significantly affected the bottom line.
How are analysts reacting to this?
While the EPS missed expectations, the reaffirmation of their sales and free cash flow guidance for 2025 provides some reassurance. Analysts are likely to focus on the company's ability to manage costs and deliver on their backlog.
Operational efficiencies and future outlook. Let's talk about operational performance. Northrop Grumman's operating income decreased by 46% to $573 million. What were the main drivers?
The decrease in operating income is largely due to the B-21 loss provision and lower income from space and mission systems. However, defense systems showed improved performance, which partially offset these declines.
And looking ahead, what can investors expect?
CEO Kathy Warden has reaffirmed the company's sales and free cash flow guidance for the year, indicating confidence in their strategic initiatives and market demand. The focus will be on executing their backlog and managing costs effectively.
Segment performance and strategic initiatives. John, can you break down the performance across Northrop Grumman's segments?
Sure. Aeronautics Systems saw an 8% decline in sales, mainly due to lower B-21 program sales. Defense Systems, however, increased by 4%, driven by the Sentinel program. Mission Systems grew by 6% with strong radar and electronic warfare sales, while Space Systems faced an 18% decline due to program wind-downs.
What strategic initiatives are they focusing on?
Northrop Grumman is concentrating on innovation and expanding their market presence. They're also optimizing performance to ensure sustainable growth, as highlighted by their significant backlog and ongoing program developments.
Key takeaways. In summary, Northrop Grumman faced some challenges this quarter, particularly with the B-21 program, but their strong backlog and reaffirmed guidance suggest a positive outlook. John, any final thoughts?
Despite the earnings miss, Northrop Grumman's strategic focus and robust backlog position them well for future growth. Investors should watch how they manage costs and execute their backlog in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Northrop Grumman's performance in the comments below.